Hello, traders. Gary Wagner with the gold forecast. It is approximately 10 o'clock, the 10th day of February, Thursday in Honolulu, Hawaii, and this is the daily report. Gold is currently trading off about $2 to $3, $2.50 currently, 1361, 1362 bid ask spread. Of course, I did recommend that we raise our stops up yesterday, and we did raise them to 1350. The low in the market was 1350.50. We, in fact, were able to really, by the skin of our teeth, be able to avoid this stop, but just by a tick. So we are still long in the market. However, what I am noticing is over the last couple of days, we have absolutely hit a wall of resistance here at that 50%. This is that 1365. This was the point that I talked to you that I said would be our first level of resistance. You can see that we have had a couple of attempts to take that out right in here, but to no avail. Now, over the last couple of days, the characters in terms of straight candlestick characters that we have seen have been as follows. We have gotten our doji. This was day before yesterday. And today we've got a hammer hangman type. Now, both of them can be read in a couple of different ways. But classically, when we see these appear at the top of the market, they can be a strong indication, a reversal signal, and thereby is making me fairly uncomfortable being on the long side. We do have profits in this market, so we're going to talk about a strategy at the end of this report. Traders, we are looking at a 60-minute Henkin chart, and as you can see, when we look at the market here, this is the moment that market went down. Of course, 1350, this is where our stop was right here. And as you can see, we just barely missed that. The market did come down. It did find support. And of course, that support took it back up to a intraday high of 66. And again, we found that really, really strong level, or let me say layer of resistance right in here. You can see it here, and you can see it here. Steve Nissan calls this a scouting party. A scouting party is a point when the bulls will enter the market and attempt to see the fortitude of the bears to see if selling will enter in the market. If selling ensues, that scouting party is unsuccessful. Now, even though this scouting party that we saw has been unsuccessful, when we look at our daily Henkin chart, which is what we have up on the screen, as you can see, we still have these predominant green candles, but I am noticing something. And what I'm noticing is this. As the market moves up and the bullish trend, strengthens, you'll notice that there is a lack of tails on these candles. And when you start to see these tails emerge, it's usually an indication that you might be hitting a top. The Henkin chart is very, very good for that. If we look in this area right in here, you can see that there are no tails. And then as soon as we get the emergence of a tail, we get that top activity or resistance being hit. So that's something that we do want to pay very, very close attention to, that we do have these signs that the market is really unable to take out this 1365 area. Lastly, I want to take a look at our longer-term Elliott wave count. This is our daily chart. I've got it in bar format so that the only thing that we're looking at is resistance, support points, channel lines, and also some Fibonacci retracement. It's quite obvious that this level of support here has now become resistance in this area. So that what I believe we will probably see, and this is what we talked about yet the other day, we talked about the fact that these markets don't tend to go straight up or straight down. So what I'm looking at is we'll probably hit some sort of resistance here. If it does have the ability to break through that particular point, then I think that what we'll genuinely see is pretty much a straight linear line up to about 1400, and that's where we'll probably find some real resistance. However, if we do get the resistance and we get no what I'll call follow through, what I'll look for is more of a complex one wave here, coming down a little bit and then moving back up. Traders, one more chart before we call it a day. I'm sorry, that wasn't the last chart. We're looking again at our 60-minute Henkin chart, and of course we talked about the fact that we've got this resistance up around 1366. As you can see, the reason that I placed our stop initially at 1350 is I wanted to put us below this 38% level. I believed at that point, this was yesterday, that that should give us a modicum of protection. That protection was light to say the least, but in fact, we did have a stop that held. And so for that reason, we are still looking at this market from the long side. Now, when we do that, the one thing that is interesting, the one thing that I think bodes well, let's say, for the bulls, and that is this, no doubt, right in here is an area of support, this 1350. And you can see that when we got this breakout, which went above that, we came back down and we retested this support level. And in fact, that support level did hold. So that my sentiment is, in terms of a strategy, we can raise our stop up, but we're going to raise it up ever so slightly, because if in fact we formed a base, what I would like to see is that base being formed above that 1360 right now. I'd like to see this base hold. If it does not, I'm not going to feel real comfortable about it. So because of that, I am recommending that we actually tighten our stops and we put our stop right within this area here, so that if the market does want to trade lower, it's going to take us out, but it's going to take us out with some nice profits. So for that reason, I am recommending that we trail our stop up to 1357. That's 1357 on a protective stop. Again, the reason being is I want to put it below this one band, so that if we do find that we have good support in this area, we can in fact ride this for a longer wave. However, if it does want to come back down, if it does want to test these areas here, I do at this point want to lock in our profits. This has been Gary Wagner, wishing you as always good trading, and we'll talk to you tomorrow for another daily report. Bye-bye.